Hello and welcome to another update video on Solana. Yeah, we start here on the daily time frame. Second Solana video today, but the first one was really early in the morning, so I thought I'll give you another update. Also, in the previous one, we only checked the smaller time frame, really. So we want to take a look at the bigger picture here first, and then we dive into the nanostructures. Yeah, I mean, what can we see here? We can see that the market is moving still in this kind of pullback area, in this support area, but it is entirely possible due to the reaction we have seen on Sunday in this support area, pretty much in the middle. I mean, the price reacted pretty much in the middle of this support region between $109 and $144. It's entirely possible a more substantial low has actually formed. For example, in this white B wave, yeah, or in the yellow wave too. However, we have not yet seen enough upside momentum to really confirm that the low is in, and we have not seen a 5-wave move up. So what we need to see, yeah, we have seen 5 waves, but only from the April low not last year, what's going on? This year. So we have seen 5 waves from April into May, absolutely. So this is a first significant signal that we are on our way higher to the next basically swing high. Maybe even first of all into the resistance area between $231 and $258, and then potentially even higher towards 360. Those would be, let's say, next ideal targets. I still prefer the yellow scenario, even though the market really doesn't care about my preference. So that's just my personal preference. For now, the analysis tells us both of these scenarios are plausible, either the white scenario or the yellow one. In both, as long as we're holding $109, that's the main pivot. In both, we can watch for higher prices because the price has formed 5 waves up from the April low. I mean, if this move up was just 3 waves, yeah, from the April low, I wouldn't be so, let's say, carefully optimistic, yeah. Because with a 5-wave move, I would generally then watch for higher prices. We can expect a higher low to form. Of course, there's never a guarantee. And I mean, again, also Solana is to a degree dependent on Bitcoin, not always on all time frames, not always in all wave degrees, and they're not always moving together. And they each have their individual support levels, invalidation points, and everything. But still, overall, we cannot ignore fully tendencies in the sector. So the tendencies point towards upside, though. Yeah. Also on the Bitcoin chart, there could be one more high. The thing is, though, I have no evidence at this point that the pullback into this June low completed. There are some tendencies on the smaller time frame that tell me it could be the case, but we have no evidence, and I will share with you why. But overall, it's important to recognize that we could be starting a C wave rally from here in our white scenario or the third wave. And even if we go lower, the market could easily stomach one more low. It could absolutely cope with one more low, which might form around $122. That's the next FIB level there, the golden ratio level, 61.8 FIB level, or $109. But below 109, we don't have anything bullish left, at least not anything that's reliably bullish. The market would need to form a new setup because $109 is the pivot between bullish and bearish momentum. A wave 2, also a B wave, shouldn't break below this level. They can, technically, so there will still be a slim chance for a surprise turnaround, but this is typically where probabilities start to shift, but it's really only, let's say, the invalidation of the setup is really only confirmed with a break below that April low, and that formed at around $95.30. Now let us take a look at the smaller time frame on the Solana chart, and here you can see why we don't really have evidence that the low is in. Now you see the correction that unfolded from the May high. Okay, I have let's say a WXY structure, and that Y wave itself is an ABC structure. We completed the A wave, we completed the B wave, and the C wave possibly. However, even though we reached the target area down there, the move down, I think it would have looked better with one more low. So that's the one thing, but that's not necessarily a problem because we reached the target area. So, I mean, it can always be that sometimes that last low on the micro level doesn't happen, but that is really just noise, especially when you look at the chart from a 4-hour point of view or daily point of view. On the smaller time frame, this became clear when we saw the first 1-2 setup here to the upside, and then the market rallied, formed a third wave. But again, you see it, we only have 3 waves up. We don't have 5 waves up, and we really need the 5 waves, as shown in yellow, for a formal confirmation that a low is in. With only 3 waves up, you do not have that confirmation. We start to see a rapid move up, absolutely, but it's still only 3 waves. And with only 3 waves, the whole structure is fragile. Why? Why? Because a 3-wave move is simply it can be corrective. It could be some kind of a wave 4 corrective rally or a B wave, and it can easily break down again. And that is what the 3-wave move tells us. It is not confirmation that we have bottomed. Yeah. Only the 5-wave move tells us where the trend wants to go. Now, what I see here is potential inverse head and shoulders pattern, though. I think that is quite interesting to mention. So just have that with a neckline and structural resistance level around $148.80. And then, I mean, this could even turn into a larger inverse head and shoulders pattern. If you see this, yeah, left shoulder, larger head, and then a right shoulder. But we'll see. We'll see what happens here. When they align with Elliott wave, I'm definitely pointing them out. But what is more important now is that the market holds above $138, $139, yeah, and then forms that one more high. That gives me 5 waves, and the question might be, where should that 5th wave take us? Now, because the 3rd wave, potentially top tier indeed, at the 138% extension at $142.40, the 5th wave to the upside should take us to 1 or 2 more or higher levels on the Fibonacci ladder. For example, 3rd wave is the 138% extension. Then we are typically expecting the 5th wave to get to at least, yeah, but really at least the 161.8 extension, $150.50 or 47. But better would be something like the 178.6 extension at 152.66. But it's not needed. Technically, all we need is that the market now holds support for an internal wave 4 pullback. Again, it's more like a sideways consolidation at the moment, at least. And then forms that one more high. That would be indeed ideal. So we need to hold 138.99. I mean, at least avoid a decisive break below it. At least that. Yeah. So then, as long as that's the case and respected, we can call this a corrective pullback in a 4th wave with potentially one more high to come. I can tell you that any break below 138.99 is our first evidence or first indication that the upside reversal attempt from the Sunday low has failed. And then we go back to the routine for one more low. Yeah. That's the update on Solana. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure to follow us on X for additional content, additional updates. There are some additional bonus updates that you get here. You can find the link in the description and the comment section. If you have any questions, you can ask them here. I try to answer as many as possible. And yeah, check it out. Thanks so much. Bye-bye.